If you're a Tesla shareholder, you need to listen to this because today a massive research note dropped that's implying Tesla shares could be in for a massive decline. Let's go ahead and get into it. So just give you a quick roadmap of where we're going to go in today's video. First off, we're going to be talking about just the big news from today for Tesla, that research note. We're going to get into it, some of the details that actually matter right here, right now, because it is moving price action already in Tesla share price. So we'll run through the highlights of that brutal research note that dropped today about Tesla. It's already been a major catalyst for price action here. It's already got shares sliding lower here in today's session. And then to go ahead and wrap things up today, I'm going to go ahead and hop into the technicals, look over several charts I have prepped for you today for Tesla, show you exactly what the trends are showing, what we can confirm with the actual current price action in the stock right now, and also, too, most importantly, how I would look to trade this current trend. Now, before we hop into today's conversation about Tesla, I do want to thank you for watching today's video. I appreciate you tuning in. And if you haven't watched our page before, you haven't seen some of the content we put out there, I do want to do a brief introduction so you know who we are, what we do here at Markham Trading. So my name is Blaine Markham. I'm the Chief Trading Strategist here at Markham Trading, my trading group. And we are a research group, and the work that we do is rooted in technical analysis. And we use our technical analysis strategies to identify high-quality options trade setups in the market. And we try to put content out several times a week talking about timely stories, different setups we see out there in the market, some really interesting chart patterns, things like that. So if you've enjoyed some of those videos or you really enjoyed this video, please make sure to go ahead and like and subscribe to the page here. Now, one quick disclaimer before we go ahead and hop into today's conversation. This video is for educational purposes only. It's not to be interpreted as official investment advice. And what's articulated here today is solely my own opinion. So with that said, let's go ahead and jump into the analysis here today. Let me go ahead and share my screen here, and we'll get things off and running. I have some charts pulled up for you here that I want to go ahead and make sure to share with you. And our first one here, of course, is just simply a price chart of Tesla. We'll hop into the technical analysis here in just a moment. But first, I do want to break down for you what exactly was the catalyst that really had shares sliding today and is projecting a pretty negative forecast and outlook here for Tesla. So today, JPMorgan Chase, one of their analyst teams, they released a just scathing research note for Tesla. They actually did maintain their rating on Tesla, but the real news here actually came from what they did to their price target. They actually cut the price target for Tesla stock. In their mind, what they think the fair value for this stock is now all the way down to $145. Now, as you can see, that is nowhere close at all to where Tesla is currently trading. It's currently right here near the close, and today's trading is just about $352, just about $353 per share near the close. So that is, implying a substantial downside ahead for Tesla shares. If JP Morgan's analyst team is correct and they're thinking about where they've placed that price target. So this would be implying another just monstrous bearish move here in the stock. And to put this in perspective, at current price levels, you can see the stock, it's pulled back substantially since December here. It's well off of those highs that we saw late last year. But here in this current drawdown that we've been experiencing here for the past several months, the stock is already just about 30% off of its all-time highs. So in a near 30% drawdown already. But after this research note today, if Tesla were to actually trade down to that price target level that JP Morgan has published here today, that would be implying another additional, on top of what's already happened, an additional 60% downside ahead for Tesla stocks. I mean, that is just an absolute implosion if that were to actually happen. Now, of course, JP Morgan, they're not implying this is going to happen overnight. It's not going to happen tomorrow or next week, anything like that. They're just talking about their outlook, the medium to long-term horizon for the stock, where they think it's ultimately going to be heading to. So that is what they're projecting, is that there could be possibly as bad as 60% downside ahead for Tesla stock. And again, just another way to think about this, at current price levels, of course, the stock is well off of its all-time highs. As I mentioned already, it's already in a 30% drawdown just about. But at current price levels, the market cap for this company is just about $1.3 trillion. So we're still talking about one of the largest market cap companies in the entire world. We're talking about over $1 trillion valuation here. But if this move to the downside that JP Morgan has forecast here in today's research note were actually to come to pass, if we saw the stock trade all the way down to $145 per share, you're talking about a massive destruction of wealth, seeing a $1.3 trillion company trade all the way down to just about $500 billion. So, of course, today's JP Morgan Chase note obviously is implying that they think the stock is set up to have a massive re-rating. They're, bringing up some questions about the fundamentals and some financials and just kind of the outlook of, possibly still struggling for some of the brand damage that they experienced over the past couple of years with some of the, political ties that have occurred here with the company. So just with that said, of course, JP Morgan has a very bearish outlook for Tesla shares. And I have to say, I also too share a pretty bearish outlook right now. It's simply just a technical analyst. Everything I'm seeing in the charts here is pretty bearish. We're going to hop into that right here. So just wanted to pull up our first chart here and start diving in. So of course, this is a 1 year long stock chart here for Tesla. So it's looking at the past year's worth of trading activity for the stock. And just right off the bat, several things that are really standing out to me. Of course, as I mentioned already, the stock is well off of its highs that we saw when it raced up to these new all-time highs, made several back here just last year, late last year in December. You can see those there. Pretty much ever since then, it's been a pretty much straight down, just very orderly decline here for Tesla. Very clear series of lower lows and lower highs. The stock has taken out some, moderately key support levels here. It took out this level from dating back from the November low. It just kind of powered right through that. Now it's traded all the way down to where we had this big gap up, these, big move up here in September. The stock moved from, just about 340 to call it about 400, 410 per share in just a couple trading days. It's closed that entire move now, and it's starting to continue to trade lower on the back of this very bearish research note today from JPMorgan. So obviously the price action has not been great. You can see that the share price has been struggling to, even get up above the 20-day moving average. That's our middle counter channel right here. You can see that it's, really that's acting as a bit of a ceiling on the stock here, really ever since year to date. You can see that ever since we got to the beginning of the year, every time the stock trades up to roughly that middle counter channel, it ends up failing. It's been a very orderly bearish decline here, again, about 30% off its all-time highs. And you can see our EMAs are starting to line up with some very bearish structure and some very powerful resistance above this trade. So we can see our red line here, that's our 21-day EMA. You can see our green line here, that's our 63-day EMA. You can see we actually had the sell signal trigger right here, just in the first couple trading days of February. We started to see that downward price action here, very quickly thereafter. We had our profit surge sell signal trigger here as we got that negative EMA crossover right there. Ever since then, the stock has been just continuing to trade lower, making that series of new lower lows and lower highs. Actually, today, it's just right on the edge of about 5 to 6 months lows. In today's session, looks like it's going to have a new 6-month closing low here in today's session. Also, too, we have lost the 200-day moving average. We can see our pink line right here. That's our 200-day there. You can see it broke below that midway through last month. It has not been able to recapture that level, and now that distance between the two is starting to widen out. So certainly the technical structure here for Tesla, all signs here in the technicals are continuing to point to the downside. But one thing that I really wanted to note here, on top of this, this is more, shorter to intermediate term technicals. Obviously, taking out the 200-day is a longer term technical signal as well, seeing that taken out. But a couple other charts I have here prepared for you too, just to kind of illustrate the real technical situation here for Tesla. And so what this is right here, this is just zoomed out. It's all this is the daily price action here for Tesla. It's looking at the past 2 years. So we can see the stock had this huge run up in late 2024. A lot of this move was on the back of the election. Investors were getting very bullish on Tesla because of Elon's connections to President Trump, thinking that was going to be a big tailwind for Tesla. You can see almost immediately that entire move as we got into the new year, shortly after the inauguration, almost all of that move unwound itself. And so you can see the stock, unwound that, throughout 2025. Of course, the stock bottomed, with the tariff tantrum of last year, continued to trade higher, started getting a bit more constructive last year. And actually, as we mentioned, it broke out to new all-time highs late last year in December. So it, recouped that entire, bit of gain that it had lost there. So it lost all that ground, recovered it, actually made some new all-time highs last year, which was pretty impressive price action. But zooming it out here, you can see that we have, was one of the clearer double tops that's been formed in price action. It's one of the clearer ones on a major stock like Tesla that I've seen in quite some time. So again, you can see the levels that it traded up to in 2024. It's up to about that 480, 485 level. That's where the stock peaked at there. Almost immediately sold off. Again, it barely powered through those here. Yet again, set up several new all-time highs here, in December of last year. But again, right in the same level, 485, 490. Intraday we traded up to 500. But again, you can see a very clear double top here, almost textbook double top here for Tesla. And that's really a bearish sign. Anytime you see a stock trade up to a level, especially across multiple years. I mean, this is a multi-year double top that happened here for Tesla, traded up there across a very long time span. Investors still had no reason to continue to buy up the stock up above that level and keep pushing it higher. That's a very clear level of resistance. Seeing that double top, it seemingly is a very hard lid over this stock, and it's a key level that's failed out twice, so it definitely points to further downside ahead here for Tesla. And one of the things I always like to look at in my technical analysis too is just how stock is performing relative to the broader index, or even just the broader sector that it belongs to. So that's going to be our next chart here, is actually looking at a ratio chart. If you're not familiar with these, all it simply is doing is taking the price of one asset and comparing it to that of another to get a relative performance to see whether one is relatively outperforming or underperforming that additional one. So right here, what we have is a ratio chart for Tesla compared to the S&P 500. I also have one of these pulled up I'm going to show you next of Tesla compared to the XLK, so just representing the broader tech sector. It's, of course, the Spider Select Sector ETF there. But just in this case right here, you can see all you have to pay attention to in a ratio chart is whether the line is simply sloping up or sloping down. Again, you can see we had this peak in December of last year. Ever since then, really year to date, again, you can see it's just this line's been sloping down year to date. What that is indicating is that since this line is moving down, that is telling me that Tesla is substantially underperforming the broader markets. And, of course, we know the performance the broader markets had this year. It started off kind of range bound choppy. Obviously, last month in March, things started to get a bit more volatile. Certainly saw a lot of volatility pick up, and it got down to about a 10% sell off. As I mentioned earlier, Tesla is nearly 30% off of its all-time highs now here year to date. So, of course, Tesla has substantially underperformed the broader market. And the story is very similar too if you look at just the tech sector itself. It's almost the exact same chart here. So, whether you're talking about just the broader market with the S&P, I'm sure the chart would look almost exactly the same whether you overlaid that with just the NASDAQ 100. So whether you're talking about it compared to one of the indexes or just simply its own sector, it has had substantial relative weakness to whatever you're comparing it to in those cases. You can see that the indexes, the broader sector has held up substantially better. Tesla has been a very, very notable weak spot in this market this year. And so, why that's so important is that, this presents a really interesting opportunity to trade something to the downside here. Anytime we spot, one of these, very powerful trends that's formed, whether to the upside or to the downside, what we like to do is, we like to try and spot these relative strength winners or relative strength losers here, and actually focus some of our trade setups around them, because that means that momentum has really gotten strong in some of these. And so with this one, obviously, since it is so strongly underperformed the market, again, you're seeing confirming things coming out, on top of the technicals here that I mentioned earlier, seeing the research note, just like today, coming out expressing, again, a very, very bearish narrative and outlook on on the stock. And so you're seeing a lot of these things line up. Obviously, sentiment's very poor on the stock, but again, it's one that we would be looking to trade to the downside. So I want to cover for you next, exactly how we would look to trade this one. And so I'm going to hop right back over to our main price chart, the one that we actually started off with here. And so this is one, full disclosure, I have not owned Tesla stock directly myself. I don't own it. I have traded it to the downside several times in the past. And that's actually how I would look to trade this one here. This is a very clear, orderly trend that's occurring right here. I think there's a lot further downside to go for Tesla stock. And in fact, I don't think that, until the stock gets down to about this, 320 level, it's this area here where it was consolidating for much of last year for several months at a time. If you just kind of take the midpoint through where this consolidation range was, it's about 320 per share. I think there's kind of an air pocket between where it's trading right now down to then. And if you zoom out, there's a substantial further downside if it takes out that support level. You're talking about, going all the way back to the lows of April of last year. So, I think there's a good bit of downside to go for this one. And given that the stock is still about a $352 stock, for a lot of people, it would be more expensive to just play this one, with just by simply purchasing a put option. Obviously, Tesla's options, they generally are pretty rich. The premiums carry a lot of extra time value, and so for some people that may not be the most appealing way to play it, just simply because of how much time premium, how much option premium they would have to purchase in order to just play this one, directionally using a just a simple put option purchase. So the way I look to play this one is either one of two ways. It's going to be one type of a spread, but either I'd be looking to probably trade it with an in-the-money put option debit spread. So I'd be looking to set up a spread somewhere probably in this range. Maybe looking to buy the 420, sell the 410, somewhere that it's sufficiently in the money, provides me some nice upside protection, so that whether Tesla continues to sell off, remains flat, or even increases a bit and has a bit of a recovery rally, regardless of what the situation, it would have a little bit of that buffer built in and still provide me some nice, high probability opportunity for a nice winning trade there. So probably that's how I would look to play it. If not that, I would also compare it to maybe just selling a call credit spread against it. I'd just look and see which one was offering the most premium, or whether the options had the most premium and gave me the most attractive looking trade, but probably somewhere in that range, is probably how I would look to actually trade this one because, of course, not only do you have the nice heightened probability element added with that spread trade, with the flexibility that, that Tesla can continue to trade to the downside, remain flat, or even increase by a bit, in the midst of this, broader bearish trend that it's in, so you have more ways with one of these types of trades that that ultimately the options trade could end up winning. So that's why I would probably pick that type of options trade setup primarily, but there's a secondary reason too. Of course, as I mentioned earlier, just the simple, cost for buying a put option on Tesla, it's going to run a lot of premium. It's going to be, pretty heavy cost likely for many traders out there. So, keeping that in mind, using a spread, that's going to substantially cut your average cost, depending on the type of spread that you set up or exactly how you structure it. It's going to give you the opportunity to participate in this trend to the downside for Tesla for a much less overall cost for a trade. So that's something definitely to keep in mind there too. It makes it another really appealing way for me to look to trade this one to the downside. So those are my thoughts on Tesla. That's, kind of what I see looking at the charts. Obviously, you can see from my outlook too, I am very much in agreement with JPMorgan and their analyst note they released today. I think the outlook for Tesla is very bearish. I think we're likely to continue to see some further downside from here. Who knows if it actually trades all the way down to that price target that they mentioned down to 145. If it did, obviously that would be a substantial opportunity to the downside if it continues to trend all the way down to there. But here's the thing. I want to hear your thoughts. If you like this video, first off, go ahead and give us a like below. Please subscribe to the page. We'd really appreciate it. But also, too, put your thoughts in the comments. I would love to hear your thoughts about what you think Tesla's going to do. Do you think this is a great opportunity? Do you think I'm just completely wrong and just out of my mind for saying that I think Tesla's going to continue to trade to the downside? Or are you full agreement with me? Do you think that the technical analysis really is, kind of winning out? The bears are in charge, and this thing does have a lot further downside to go. So go ahead. I'd love to hear your thoughts. Put them in the comments. Again, like, subscribe. Really appreciate it. Thank you so much. And also, too, before you go ahead and check out our page. In the bio on our page, we have a link to a newsletter. It's a weekly newsletter. Would love to have you go ahead and subscribe and check that out. Thanks so much for tuning in. I'll see you back around here soon.